Fish, welcome back. It's good to talk to you.
Hey, Scott, how are you?
I'm good, thanks. I'm gathering that you were as surprised as most with this move by OPEC?
Not really. I mean, I think that Henry, I didn't know it was going to happen, obviously, this weekend or whatever. But, I think that, just like the FT said, I think that the U.S. said that if the price of oil had gone down to 70-ish or so, that they would come back and buy the SPR. I think people were patient to see whether or not the U.S. was going to do that. When the U.S. didn't do that, OPEC said, okay, we're going to cut. I mean, it's pretty, you can really ban oil if you went ahead and said every time it gets near the 70, we're going to, wait, hold on a second. Wow, I'm by a steep price. Hold on. It's really easy when oil is at $70 if you're going to support the price. And at $90, you incentivize everyone to produce, right? But you tell everyone at $90 that they have to, max out. And then when the price falls, because of weather, economy, and you don't do what you say, this is what OPEC does. And eventually, the same thing is going to happen in natural gas, because natural gas is up $2, which, all the producers are eventually going to cut back on CapEx. We're going to have the same show a year or two from now in nat gas when all this LNG has to be exported, and we don't have enough production to export it to.
So you think this is direct retaliation, if you want to use that word, by the Saudis and others as a result of the Biden administration not buying from or not refilling the SPR when oil had a 6 handle on it not that long ago?
It doesn't even mean that they had to buy a lot. It's just, even a little bit of it, right? And I wouldn't call it retaliation. This is just business. You're going to go ahead and produce more at 90, then you're going to cut back on production at 70. If you're going to go ahead and, like refiners, the reason why there's no more refiners being built in this country is because forgetting about all the paperwork and the bureaucracy and the environmental concerns. But who's going to build a new refinery when you know that the government's trying to put you out of business? If the government said, okay, guess what? We know the life cycle of in order to make back the money in a refinery is 20, 25 years, and we're going to recognize that. And even if we shut you down 7, 8 years from now, we're going to go ahead and pay you out for that 25 years. You get all the Warren Buffetts of the world to go ahead and produce as much as they possibly could and build new refineries.
The last time you weren't actually on, but you had told me privately that oil should be bought at 65 and sold at 85, and that it's going to pretty much remain in that range. Now, first question, do you think this news upsets that range? And then what happens if oil approaches the $85 level, which it may, who knows? It's at $80.20 as we speak now. How would you assess both of those questions?
I would think that there'd be pressure from everyone to produce more. I mean, you lower inflationary expectations if you can ban the commodity, where 65 is the bottom and 85 is the top. When you have wild cards where, you can have, because of a lack of production or because of weather, prices spiked above 100 and then prices go below 65, in the 50s, then, it upsets, how you budget stuff. And again, I always say if you get 70% of you want in an argument, you win. So if the U.S. isn't comfortable with $75 oil, then they're going to have these swings back and forth. I think that this is not retaliation. I just think this is just business.
Speaking of, what are you doing within that business today? You've been pretty nimble in the way you've moved either in or out.
Unfortunately, we were long. We got out most of our stuff last week. Okay, we launched some stuff. We could move up. We lost, natural gas. You have a huge roll coming up in the next week or so. Between all the ETFs and everything, so I'm not really sure how that's going to play out. But eventually, natural gas is going to face the same dilemma as crude oil does. They're going to cut back CapEx. This year, there's really not that much demand for increased LNG. Next year, thereafter, there is. And how are we going to supply that LNG? Higher prices, unless we increase production, unless we increase CapEx, which means you don't increase CapEx when prices are approaching $2.
Yeah, wow, it's been a stunning slide to watch nat gas. Mark, I appreciate you calling in. I'm going to let you go.